Welcome to another episode of China Update, where I provide you with the most up-to-date political, economic, and geostrategic analysis on the world's number 2 economy. My name is Tony. Let's jump in. Happy Tuesday, everybody. Today, the channel hit 60,000 subscribers. This is an amazing milestone, and I could not have done it without your ongoing and incredible support. I want to take this opportunity to thank you all for following along with the channel. It has been a true pleasure to be able to produce these videos for you all every day. At the current rate, the channel could hit 100,000 by the end of the year. Something that seems almost unbelievable. Whether the channel reaches that milestone or not, I will continue to produce these videos for you all every day, as it is a privilege and an honor to do so. Let's jump in. The big economic news from the last 24 hours is that investors expected China's central bank to trim a key investment rate on Monday, but policymakers kept that unchanged as concerns about volatility of the yuan and the prospect of the Federal Reserve in the US easing its rate limit the People's Bank of China's room to support expansion. The central bank maintained the rate on its one-year policy loans while pumping more cash into the system to meet demand for funding. Frederick Newman, chief Asia economist at HSBC Holdings plc, speaking to US media, expressed, quote, "The MLF non-cut this morning does suggest there's not a lack of urgency in terms of adding more stimulus. You don't want to cut too rapidly in China, and so you might want to use liquidity injections and other types of credit easing tools rather than an outright rate cut." End quote. Robert Carnell, regional head of research for Asia Pacific at ING Group NV, speaking on the move, expressed, quote, "In light of the weak data, a cut would probably have undermined the yuan and lead to unwanted currency weakness. I think the authorities are quite constrained with what they can do, and so I'm neither disappointed or surprised, but I am resigned to this being another difficult year." End quote. The move, or non-move, came days after new data showed China marked its longest deflationary streak since 2009 in December. And as we saw yesterday too, credit growth declined to its slowest rate on record. This complicates things for the central bank. Quote, "The root problem of the weaker-than-expected economic recovery is not that financing costs are too high, but rather that demand is insufficient and confidence is weak. Some people think we should lower interest rates to zero, but that's probably not the right remedy. The most important thing is to lift confidence." End quote. Meanwhile, foreign investors continue to run to the exit doors too, as China's economic woes outweigh historically low stock prices. US-based Bloomberg reports yesterday that global funds offloaded 7.9 billion yuan, $1.1 billion of stocks in the first 2 weeks of 2024. Chinese equities saw their worst start to a year since 2019 and are trading near their lowest level in nearly 5 years. The selling came after foreigners recorded their smallest ever annual purchases of onshore stocks in 2023, putting January on track for a 6th straight month of outflows. The situation is so concerning that Chinese authorities have in recent days told some institutional investors in the mainland not to sell stocks, as regulators face renewed pressure to stabilize share prices following the steep decline in the first few weeks of this year. UK-based The Financial Times writes today, for example, that since October, market regulators have been providing private instructions, known as window guidance, to some investors. Those familiar with modern Japanese economic history will be no stranger to these types of instructions. Such restrictions on selling helped to spur a rebound of about 3% for the benchmark CSI 300 stock index in the final week of 2023, traders said. Quote, "But the curbs on some smaller mutual funds and on brokers were eased in the new year. The index completely reversed those gains and is down more than 4% this month. Beijing has now reimposed such restrictions on securities companies, large institutional investors in China that both act as brokers and have proprietary trading aims, according to traders and investment managers of 3 different financial institutions." End quote. And speaking of poor stock performances, in trading yesterday, Chinese tech giant Baidu saw its stocks in Hong Kong crash after Hong Kong-based South China Morning Post published an article about People's Liberation Army researchers discussing the use of Baidu's Ernie chatbot for military AI applications. It appears that investors were spooked by the risk of attracting potential US sanctions. The search engine firm, generally considered one of China's leaders in artificial intelligence development, fell 11.5% on Monday, shaving off 36 billion Hong Kong dollars. The South China Morning Post article reported, quote, according to scientists involved in the project, a research laboratory with the People's Liberation Army's Strategic Support Force, which oversees the Chinese military's space, cyber intelligence, and electronic warfare, has tested its AI system on Baidu's Ernie and iFlyTech's Spark, which are large language models similar to ChatGPT. The military AI can convert vast amounts of censored data and information reported by frontline units into descriptive language or images and relay them to the commercial models. After they confirm they understand, the military AI automatically generates prompts for deeper exchange on various tasks, such as combat simulations. The entire process is completely free of human involvement. End quote. Baidu strongly denies the report, expressing in a statement today, quote, Ernie bot is available to and used by the general public. The academic paper published by scholars at the Chinese university described how the authors built prompts and received responses from large language models, using the functions available to any user interacting with generative AI tools. Baidu is not engaged in any business collaboration or provided any tailored services to the authors of the academic paper or any institutions with which they are affiliated. End quote. Some commentators have observed that the South China Morning Post article and subsequent market reaction may be overblown. For example, Substack Peakonology writes today, quote, the South China Morning Post report is a complete misrepresentation of a vague, confusing, and disastrously written article, and is untrue. End quote, adding that the Chinese journal paper did not or even imply a military AI, but was merely theorizing remotely about the possibilities of utilizing these types of language models. The PLA researchers did not in any meaningful way experiment as they claimed. But the fact that the stock value of a major company crashed so hard after the publication of a vague article just goes to show how nervous investors are over China's stocks in the current geopolitical environment. Quote, people are worried about sanctions on Baidu, obviously after the news report about the military ties. They fear that the US government may announce measures to target Baidu. The overall sentiment over China is weak, and US-China relationship is still intense. So investors sell first, no matter if the news is true or not. End quote. Next up, we have one more economic update to cover, but just quickly, if you are enjoying today's video or getting some value from it, I have a huge favor to ask, and that is to like and subscribe. This is only 2 clicks of the mouse, but it is a huge help for me, and it's the best way, along with sharing the video, of course, to help the channel grow. And for those who want to help keep the channel financially sustainable, Patreon and Buy Me a Coffee links are in the description below. The channel relies primarily on subscribers to keep going. Thank you so much, everybody, for the ongoing support. Let's continue. China's Premier Li Qiang is speaking at Davos today. He will no doubt be pushing the message that China is open for business and that his country's recovery is well on the way. He may have an uphill battle speaking to that audience, however. A survey of economists released by the World Economic Forum in Davos this week shows doubt of China's capacity to achieve much of a recovery this year. In its report, the forum expressed, quote, China is a notable exception as weak consumption, lower industrial production, and distress in property markets weigh on the prospects of a stronger rebound in 2024, end quote. The survey is of chief economists at public lenders such as the International Monetary Fund, as well as private sector financial and corporate heads. Almost 7 out of 10 respondents think global fragmentation will quicken in 2024, with the majority seeing volatility in economies and stock markets being a likely outcome. Next up, and finally for today, Beijing has censored another article from Chinese financial media outlet Caixin, once again giving us an idea of where the line is in the cat-and-mouse game between censors and more liberal publications and what they can write about in the country. This article was especially controversial. Recently published, it was about the death by police torture of Sun Renze in Xinjiang province in 2018. The official explanation for the death in police custody was, quote, choking while drinking water during the interrogation, end quote. As the censored Caixin article explains, however, a security official concerned when he was instructed to turn off the cameras in the interrogation center kept one camera on. The camera captured what ended up being a prolonged torture of the young man, including waterboarding, resulting in his murder. The officials and police involved were eventually prosecuted, but as we can see with the censorship, the case has been swept under the rug. The following is from the censored Caixin article. Quote, during the trial, Ren Tingting, the mother, repeatedly broke down in tears over her desk. Before the adjournment, Ren Tingting suddenly stood up from the prosecutor's bench, shouting at the 8 suspects below, murderers, I will not forgive you. Ren Tingting is over 50 years old. Her husband was a veteran police officer who died in the line of duty. Her only son was criminally detained on March 27, 2018 on suspicion of provoking trouble. In the early morning of September 27, 2018, after being interrogated by police officers for over 7 hours, Sun fell into a coma and was subsequently transferred to an ICU of several hospitals. On November 9th, Sun, who never regained consciousness, passed away at the age of just under 31. Ren Tingting, who witnessed her son covered in bruises and unconscious in the hospital bed, could not accept the official explanation. For the next 5 years, she faced pressures from various quarters and tirelessly sought justice for her son's unclear and unfair death. On November 6, 2023, a case involving police officers causing death through violent interrogation was quietly pronounced by a city court. The 8 defendants were found guilty of intentional injury and were sentenced in the first trial to fixed-term imprisonments ranging from 3 to 13 years. End quote. Okay, that is today's episode of China Update. Thank you so much everybody for watching. Have a good Tuesday, and I will see you all tomorrow.